When you hear tax-free retirement account, what's the first two words that come into your mind?
Bull.
They're calling it a tax-free retirement account, but what is it actually? Really simply.
A permanent life insurance policy that you're overfunding.
Right, that you're putting a lot of money into, okay? Are they actually tax-free?
No, because you paid taxes on the money that you put into the plan.
Right. So the phrase tax-free I find really annoying, okay? Because you can't have, tax-free to me means you paid no taxes on the deposit and you pay no taxes on what you get out, okay? The way most
Well,
of
they're counting on you to die for that part to be true. But if you try to take out money before,
you can take the money out. You can take the cash out of a life insurance policy tax-free. That part's true, okay? But it's not tax-free because you pay taxes on the deposits.
Because it needs to be a loan. If you break the policy before you die and take the cash value out, you are taxed on it.
True.
Okay, so
right.
when people are talking about this, there's two things. Tax-free. Well, you paid taxes before you put the money in, and if you don't use it as an insurance policy in the end, you don't keep it, you break it to pay off those taxes and take some money back out, you're paying taxes on that money you just took back out. Okay, so actually, dose.
Oh, okay.
Dose is more than none.
Okay. Now, how does a tax-free retirement account compare to a 401k plan?
Well, you have to qualify for the life insurance.
Yeah, is there any medical underwriting for a 401k plan?
No.
No.
Believe it or not. Who knows, depending on your policy, how much extra you can put in, right?
Right.
It is much more of a known quantity what you can put into a 401k plan year to year.
When in a policy's life is the cost of life of the insurance most? At the beginning or at the end?
At the very beginning.
Right.
You put $10,000 into a 401k plan,
yeah,
and you use $10,000 at the beginning of in insurance, life insurance, and you stop the insurance plan.
The first year, you're probably not going to have much of the 10 grand left.
You're probably not going to get anything because you're paying
right.
for insurance.
Right,
okay?
Exactly. Please don't get me wrong, okay? I'm a big fan of permanent life insurance, all right? I just have a real big problem with the phrase tax-free retirement account, okay? Sorry, a little pedantic being in the compliance industry. All right, are you better off having only permanent life insurance or coordinating permanent life insurance with a 401k plan?
Usually the diversity is better.
Right, you have both. They're also different tax planning vehicles. Don't have one, have both, all right?
And I'd say when you were young, the cost of insurance is much lower, and when you're older, it's much higher.
Right, that is a very valid point because
so
we've got
401k plan, that doesn't change.
Right, the cost of getting into a 401k plan is true whether you're 21 years old or 60 some odd years old, all right? Whereas putting $10,000 for a 21-year-old into life insurance versus putting $10,000 into life insurance for a 65-year-old, you're gonna have a different amount of cash at the end of the day, all right? Now then, hopefully you found our little rant helpful. Please go and watch our last video, Make Millions with Your 401k, and thanks for watching.
Toodaloo. And also, he likes to be contacted for further conversations. And he likes you to like things, and subscribe, make comments, make criticisms. He may not look like it, but he's looking for that.
We're not using that.
Depends.
I'm not wearing Depends. What? Oh. Not yet. She checked. She checked. She checked.
I like to fact check.